All right, welcome back for the episode of Carnivore Trades. Today is Thursday, April 27, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So market's up 2% there on the spiders. Triple Qs are up almost 3% at one point here, now just 2 3/4. Dow up 1.5, and then we have the Russell bringing up the rear at just 1.3% gains here. So yesterday, I talked about the possibility of a bounce. I said we would likely have some upside here. Would be a complete liar if I said that I saw this much upside. So I thought we would probably push up, and I thought if we could get into the 408 area, we'd be in danger of a rollover. And then if we could get through that, I was thinking maybe 20 MA and then kind of this trend line here. But we just kind of blew through it. Lots of zero DTE call action really just blasting us off here. Even in the middle of the day here when we got overbought, we just got more overbought here. Lots of zero DTE calls coming in. Triple Qs just grinding up all day. So big trend day up for the markets. What does this mean? Well, to me, so last couple of days, we talked about the highs likely being in. And it's likely, I said yesterday, it's more likely now that they're in now with that secondary push down. We actually closed below. I think I misspoke yesterday, but we actually closed below this green bar here at 404.55. It was actually 404.36. So we actually negated that green bar, and yet we squeezed up today. What's going on here? This is the type of price action I thought we would get yesterday, more so than anything in the morning. Well, we're getting it today, and we're getting it really on no news. Like GDP came in cold. We had an initial little dip. If we look over at the futures, you can see we had a little bit of a dip there on GDP, and then we just kind of floated right up there. So what does this mean? Right now, I think we're probably, are we going to make new highs? I think it's possible at this point. I don't see much more than a slight nominal high, though. And I'll tell you why. So one thing, so we have Amazon after the bell, obviously. Yeah, the last 2 days, Meta. So obviously Meta, had a big pop. We talked about that yesterday in the video. Microsoft had a big pop. And again, this is why I thought we should have been up yesterday. We were up 7.5% on Microsoft yesterday. This is now up 10% in the last 2 days, by the way. Way overdone here. But either way, before I get off track, Amazon after the bell. We've kind of, the opposite happened, right? So yesterday Tuesday we dumped into the bell both days. We had beats. Now I think you kind of priced in a little bit of this earnings in Amazon to a degree, not Amazon itself, but even just the whole market. That doesn't mean I'm predicting a dump or anything in the after hours. I just think the expectations are really high here. But secondly, we have now all the big tech earnings out of the way after Amazon, except for Apple, and they report next week. We also are going into the FOMC. So if we do start to pump up, I think that's going to price in any sort of dovishness in the FOMC. So I don't see a ton of upside there, and I see probably, believe it or not, less upside in the triple Qs. I know everybody's going to talk about how great this pattern looks, but it's more of a bigger time frame thing. We probably get through this gap, or I would imagine at least, but I'm just not really seeing that much upside at this point. Could we come up here and fill this gap? It's certainly possible, but this is really, so what I really want to say here is, if you look at the market today, it's just Microsoft, Meta, Amazon, Google, and Apple, and that's really it. The Russell is green. It's bringing up the rear, though. This is more of a dead cat bounce than anything. Dow Transports, they are green. They did have a nice bounce here today, and they are trying to negate that head and shoulders, but it is still there on the weekly. So technically on the weekly, it's never triggered because we never closed below it, and we can't until Friday, which I doubt will happen at this point, at least until next week. But it is getting a bounce here, but this is still a horribly bearish chart. This is more of a dead cat bounce than anything. And if we look at the semiconductors here, we talked about that 240 level. They pierced it today, and we rallied back up. So it is getting defended, but look at the intraday action. I mean, this sold off the first hour of the day, whereas the markets were ramping up. So again, like I've been saying lately, breadth is terrible. It's really just 5 stocks. And this is the type of price action you see before a major drawdown. This has me very very skeptical of this rally. And I mean, they definitely can hold it up a little bit longer here. Maybe they trapped bears the last 2 days. Maybe, they got everybody bearish here. This is definitely one of the hardest markets you're ever going to trade. So, I mean, it had a good sell off the last 2 days, and we closed below that green bar. And they just popped it right back up here on no news. I mean, this is definitely a tough market to trade here. And again, nothing to say they can't take it a little bit higher. And again, I noted this the last 2 days too. I was like, the volume's kind of light here for this type of a sell-off. But, we have light volume again today, and here we are surging. So I think we're basically on our last legs. Could they give us a little blow-off here first? It's certainly possible, but I think that's about it. I think big tech has really given us a signal. If you look at the equal weight S&P here, RSP, sure, that's up 1.6 here today, but it's not up 2%. It's not up 3% like the S&P and NASDAQ are. And again, this looks a lot more, a lot closer to the transports here. High, lower high, lower high, versus the spiders, which is, they took out that high from the 6th, and now it's, made a higher high here recently, a local high. So it's just 5 stocks. And to me, it's big money bidding those big tech names up, mega caps up, and they're really just kind of fading everything else here. At least that's the way I see it right now. I think once big tech earnings are over with, and once FOMC is over with, there's not going to be much to rally on here. But market's holding up here. We can't take anything away. This has been a great market for day trading. It's very tough for swing trading lately. I mean, again, this is right here is the 31st. And we're coming into the end of the month tomorrow, trading month, 28th. We have gone completely sideways. So very tough here. Good for day trading. You can see on the weekly, this pattern's intact. We're actually now green for the week there on the spiders. Really, the bigger time frames, though, to me, are what's kind of telling. That monthly 20 MA has been resistance. We could probably wick through it. I can't rule that out. But there's not a lot of room up here. And the same thing on the triple Qs. We're very close to that area. I think it wants to get tested, maybe wicked through. But I'm not seeing a ton more upside here, despite the nice, weekly chart pattern there that we have. To me, breadth just isn't there. And, market's just ridiculous. I mean, the VIX here, it's like the last 2 days, everybody got very cautious, and now it's like we're right back to complacency. And this is ahead of Amazon earnings too. So it's like you're seeing hedges come off in a way before Amazon earnings. Just very strange activity all across the board here, but definitely very advise extreme caution in this environment. We could get a blow off here, or we could get a reversal at any time. I think we're in that kind of environment where, like I said, we're still into the risk period. That's not gone away. That hasn't gone away yet. That'll be here for a little bit longer. So there's still a window of risk for this market, but spiders, huge trend day. Tomorrow will likely be flat to positive, I would think. Even if we fade a little bit on Amazon earnings after hours, I think generally you don't get a turnaround on a Friday. So I would think Friday will probably be flat to positive. Then maybe Monday, Tuesday, we can be up again a little bit. Wednesday's FOMC, maybe that's a blow-off move. If I noticed similarly too, if you go back and look at November, this weekly pattern almost looks kind of the same. So we have that big weekly candle, and then that kind of almost like a rolling top with that big blow-off move. That was also on the Fed. I think it was Jerome Powell speaking. And again, we have that big green candle, and then kind of almost a 3 higher highs in a way on the weekly, and then now it's kind of coming back in. So maybe we get something like that, big outside move, and then we come back in. Either way, just kind of theorizing here, but markets, huge 2% up day, and what can you say? Got to respect them here for the time being. They're definitely going to close it above this pivot here, 411.16. We're well above that at this point. We're basically filling that breakdown gap there at 412.63 right now. So market's holding up. We'll see what we get going into next week, but tomorrow I think we're kind of more on the flattish to positive side. Triple Q is going to be mentioned. That looks poised to go up there and fill that gap. We'll see how it does after that. Again, Amazon. Again, it's all going to be dependent on those earnings. Later today, Russell 2000, again, this is one of the red flags. Still, it's up today, but this is just too much chart damage here. Maybe it can get back up to gap fill, maybe the 50 MA here, but this is a weak chart, and this is a huge problem moving forward. The Dow, nice recovery after that little dip yesterday. Again, we filled that gap there. Nice little outside move. Remember, the Dow's price cap weighted, so we don't put too much weight on it, and it is still below this this pivot here. But either way, nice little pop there for the DIA. Over to the semis, like we talked about. Again, it's getting a nice dead cat bounce, but the highs are in on this. Does not have a ton of upside here. Maybe you can retest 250, maybe the 20 MA, but maybe this trend line, which is upsloping, so you could kind of come up to this area. But I don't see a ton of upside here in the semis, and they are just not acting well. We've been seeing distribution on them for weeks. Cloud software, this is now a weaker sector as well. I believe Service Now reported, and it took a nice hit, but it came back off the lows there. But either way, it's getting a nice bid here today, but still not above that red bar high from Tuesday. So again, if we look at the spiders, again, that's well above that, and obviously the Qs are as well. So that's telling you it's a laggard sector, and this was a strong sector for a while, and now it's a laggard sector. So even if the SPY pushes up to that 420 kind of area, I would say it's a little bit harder for the IGV to do that now, just because you're in a much weaker technical position, and obviously it's definitely showing us that it is showing laggardship there. But anyways, let's get over to the transports, which we talked about already. Nice bounce. So again, it's daily head and shoulders is negated for now, but the weekly could still be in play into next week. Either way, massive lower highs here. Now a daily chart lower low as well. I just don't see anything good here. So if any sort of pop it happens in the spiders, it's going to be short-lived. And I think the transports are telling us that this rally is really on its last legs here, which is something I've been talking about for weeks now. Over to bonds. So yields got hit pretty good today. So the 2-year came down 31 basis points here, and the 2-year yield is at 4.095. So that managed to bid up a little bit here. Yield curve still well inverted. So that's something the Fed's going to need to do something about and get that long end down. The 10-year here backing off as well, and then the 30-year, let's look at the TYX. That did pop up a little bit here. So again, maybe signaling a little bit of risk off. Bonds, there's lots of different things that can drive bonds, which is weird because the GDP numbers today were pretty cold, but bond yields went up anyway. So, sometimes the market does what it wants to. Either way, we'll see what we do. They're kind of just in a holding pattern right now. XHB getting a nice pop here, still not above that 70 handle. Maybe it can make a new high, slight higher high here. This has just been so tricky lately. Every time it looks like it wants to go down, it just pops back up. But overall, again, I think home builders here just way overvalued, way inflated at these levels. ITB here had a nice outside candle yesterday, recovered pretty much all of those losses today, up 2.5%. We'll see what this one does going into next week. Nice little inside candle there on the weekly. I just think the monthly, you're going into way too much resistance up in that area, but they've held up well, so we'll continue to respect them. VNQ getting a bid. This is still weak. We closed below this pivot low. Yes, it's getting a pop, but you did some chart damage here. I'm not in love with this. It's going to need a lot of help if it's going to ever get up to that 85 handle, but it got a nice little bid today. So again, we'll respect that. XLF getting a bounce here, but this is definitely on the weaker side, right? So we broke that steep trend line, and we're well below Tuesday's high. We did reclaim the 20 moving average, but this is definitely a weaker chart. Overall, obviously KRE still weak, still below Tuesday's high. KBE still weak, still just below Tuesday's high. And then broker dealers here, definitely on the weaker side as well. So financials still haven't really recovered, still haven't done a whole lot here. And that's going to be a problem. This is what happens, when you have risk, when you have bear markets, you get these two down days, these shorts jump on, and then everybody gets flushed out here. But this problem hasn't gone away here with the financials, and it will be a problem moving forward. So just be careful of that and be aware of that. Don't be fooled by the rally. This is still a major, major issue moving forward. Anyways, over to crude here. So crude just really kind of an inside day, really quiet, all things considered. It's trying to hold this kind of trend line here, which really goes back quite a while. And it's basically just hanging on to that right now. I'm not sure what it wants to do here. If it puts in a pattern that probably goes down to 70, I would say that's probably, I'd probably say like 35% that it wants to go lower. Odds that it wants to go lower there. But we'll see what kind of pattern it puts in. If it goes sideways, it's definitely going to 70 bucks. XLE, a little bit on the quieter side as well, up 0.5%. So again, a lot of the action here is big tech. By the way, tomorrow, Chevron, Exxon, Conoco, also Berkshire reports too. So definitely could be moving there in the XLE, and it's holding that 200 moving average. So again, it's hanging in there. Okay, XOP getting a bounce again. I like this one a lot less. OIH on the weaker side. This is barely positive here in a wildly up tape. So energy is showing us that it's weak right now. So I wouldn't touch any of these plays just yet until it gets a little bit clearer. Nat gas, on the other hand, having a nice pop here, up 2.6%. And again, what happened again, just like last week, inventory numbers came out bearish and the dip was bought. So again, it's telling you smart money is picking this up while it's cheap. They're not going to wait for the inventory numbers to improve. If you wait for the inventory numbers to improve, it's like buying, that's like buying Meta now that the earnings are out. You don't want to buy it up here. You want to be buying it when people hate it, right? So same kind of deal there with nat gas, but the technical position looks a lot better to me on the intraday, specifically the 4 hour. So we had this little bear pattern here on the intraday, and that failed, and now we're consolidating up. If you take out this pivot, this is going to get going, and it's not going to look back once it starts. So nat gas in better position. Dollar index update for you. I did talk to Thinkorswim support today, and they said they were going to work on this. Apparently nobody's brought this up to them, so I'm the first one. So you guys can thank me later if this gets fixed. But they said they are going to work on this. I might need to update it and reset everything, but they did talk to me about that. So I think they said that paper trading with the on-demand might be fixed now, but they said a few hours for this. So we'll see. I need to restart the system, but hopefully that works. Fingers crossed there. But dollar index, again, just grinding on that 20 MA, right? Just nothing doing there. I do think it needs to go down and test 100 still. Again, there's your case for one more pop in the SPY. Again, nothing has changed there. I feel like I say the same thing every day on that, at least for the last week. Gold continuing to hold 1994, no problems there. But if this goes sideways, it wants to go lower. Silver, same thing, kind of grinding on 25. This is setting up for a move to 24 to 23.50. And then platinum backed off a little bit today as well. I think that 20 moving average needs to catch up to price if it's going to do anything else. And then copper, getting a little bit of a dead cat bounce here, but not a great look here for copper with that breakdown. I would say that this is going to set up a bear flag to go to 375, but lately the way copper has been acting, it probably wants to go to 4, just because it seems to want to do the opposite of what I think it's going to do. Ultimately, it's got the same destination, I think, but every time it gives us this bear look, it makes these big retraces. So we'll see. $4 is going to be good resistance on the upside, and then 375 is very good support there for copper on the downside. All right, over to Bitcoin here. So this is ridiculous. Right, this is just, so yesterday, you got to go like to an hourly just to do this justice. So we went all the way up here to 30,000, then we puked all the way to 27.3, and then we recovered, flagged, and now we're right back to just shy of 30K again, and we're right below this green bar. If this consolidates on the hourly, this will go through 30,000. You can't make this price action up. And I didn't see anybody making a bull case for that pattern yesterday. I certainly didn't, because that was a huge rejection. And it was at the lows when I was doing this video yesterday. But only Bitcoin, right, would do this. But that's got, if that can consolidate that, then it can go up. I can't rule out that 32,000 area one more time. But yeah, what a move here. And again, it's holding up. So again, like I said yesterday, Bitcoin getting a bounce. Maybe that was, telling us that the markets were going to bounce. I thought the markets would bounce today. I didn't think we would be up 2%, though. I thought we would be up like maybe 1 on the SPY, and maybe 2 on the NASDAQ just because of Meta. But, what a move here. Don't get complacent, though. This market is not out of the woods. There is upside here potentially, but we are way closer to support, or I should say, we're a lot closer to resistance here on the bigger time frames than we are to support. And again, the more overbought we get going into that FOMC, the more incentive the Fed has to whack this market down. So be careful of that. Anyways, guys, gonna wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.